Cattle markets took a pretty positive turn in November. Hi everybody, Coulter Brown here from the Northern Ag Network with our monthly report on livestock markets. Appreciate you taking the time to join us. Most of this fall was pretty tough on our livestock futures and the markets in general, but we did see a welcome turnaround in mid-November as both the cash-fed cattle and the futures took a healthy turn upwards. Now we are expecting that to feed into the feeder cattle and the calf markets in December. Now here in today's report, we're going to talk about what's driving those futures. We'll also look at our calf markets, the cows, and the production sales that are kicking off, as well as the sheep. We'll talk a little about what to expect in 2022, and we'll wrap up by talking about some federal policy for livestock markets. Before we get too far into the report though, I want to take a moment to thank our sponsors. AgRisk Advisors has been with us since the very start, and they sure are a great resource to help producers manage risk. Hope you got your pasture, rangeland, and forage policy in place by the extended deadline of December 1st. You can keep track of that policy with text alerts, and other tools and resources are available at agriskadvisors.com. Now getting back to our markets, let's talk about what's driving the cash and futures higher. We've been talking about it for some time, but finally feed yards are regaining currentness and front and fed cattle supplies are working lower. Packers are responding to strong beef demand and healthy margins by paying more for cattle. Packers actually found themselves a little bit short bought in November, and with the holiday season upon us, they were willing to pay a little more, and that spurred the futures higher. Really, the cash had been stuck in a bit of a rut for much of the fall here, kind of priced in that 122 to 126 range, but in November, that cash market gained $12 to $16, the highest cash prices we've seen in more than 4 years. Cash has now been up for 5 straight weeks, and this past week we saw live sales ranging from 136 all the way up to 140 and dress trade from 215 to 219. Now the live cattle futures were holding quite a premium to the cash, so initially when the rally started, the futures didn't react as the market had largely priced in the rally, but the higher cash continued and that propelled the futures upwards. A lot of the nearby contracts got above 2-month highs, and deferred futures were at contract highs. They did slip a little bit lower recently, but there is a lot of momentum for these cattle markets as we approach the end of the year. In the last month, boxed beef has stayed pretty steady, which isn't necessarily a bad thing to find some stability, especially for consumers, but sure didn't propel much rally in the markets. The cattle on feed report was actually slightly bearish this month, but pretty well predicted to see inventory just narrowly lower and placements into feed yards actually above year-ago levels, as you can see. Well, don't sleep on the feeder cattle futures. They've not been left behind by the rally at all, even though we saw corn prices launch upwards as well. Feeders actually led the way for much of the month, and looking out to the fall of 2022, they're now pushing close to that $1.80 mark. And you can see as we move into the next year, they keep marching up, so it's just a question of how high can these feeder futures go. A few weeks ago, I spoke with Don Close, Senior Animal Protein Analyst with Rabo AgriFinance, and I asked him what's he projecting for 2022. On the average, he said fed cattle prices will average $1.40, yearlings at $1.75, and calves, he said, range in $1.90 to $2.10 with an average right at the $2 mark. Now I mentioned that we haven't quite seen the rally from the futures extend to the calf market, and that's due to some regional issues as we're still marketing a lot of calves as we have for much of the fall here coming out of dry pasture, and trucks have been hard to come by, but that situation is starting to open up. We're through most of this fall run, like we said, a lot of calves marketed early on, so not a lot left to sell, and I wouldn't be surprised to see these local markets pick up a lot of the momentum that the futures have created. At the last feeder sale at St. Onge Livestock, most of the steers sold steady to 5 higher, with upper 4 weights from 196 to 204, 5 to 5.5 weights 183 to 191, upper 5 weight steers 168 to 176, and 6 weights largely from 160 to 170. In the coal cow market, a bottom did seem to be found in October, but since then we've only seen a narrow price increase as, like we say, still just selling a lot of cows that are coming out of very dry country. At the public auction yards, a lot of the bigger coal cows sold from 50 to 56, lean cows from 42 to 46, and still a lot of low dressing cows selling from the high 30s to low 40s. Packers are still backed up with cows, so most of that which is being sold right now is going to feed. Now, we have started on the production sales here. The Vermilion Ranch held their fall performance sale recently, and we saw the 2-year-old bulls, 138 of them, average 57.17, yearling bulls at 68.87. Compare that to last year, and the yearlings were steady with the 2-year-olds a little lower. Over 1,700 fancy commercial bred heifers sold, an average $2,000. That's 11% over last year, with quite a few more head selling. Torrington Livestock is holding their weekly bred cow specials, and those prices have performed pretty well. A lot of the bred cows being sold across the region right now are leaving the country. Now that doesn't mean they're out of the cow herd, they're just going to other parts of the country where they haven't been dealing with as much drought, but I will say I've been impressed to see the amount of local demand we have for these bred cows. And turning to the sheep market, prices have worked lower in the fall, as they typically do, but these prices still about 35% above where they were a year ago, and I don't know if we've ever seen the cull ewe market this strong. They're largely selling from $1.10 to $1.25. At the Newell Sheepyards, the last sale there, 60-pound lambs largely sold in the $3 money, 70 to 80 pounders from $2.70 to $2.82, 80 to 90-pound lambs $2.61 to $2.85, and the 90 to 100 pounders $2.31 to $2.54. Wrapping up here, we'll look a little bit at the federal livestock market policy, as at the time of this recording, livestock mandatory reporting has still not been reauthorized. That needs to be done. The cattle and sheep industries are hoping for a 5-year reauthorization, although at this point it looks like we'll see the can kick down the road for another 1 year. Now, in November, we saw a compromise bill introduced relating to mandatory minimums for cash-fed cattle trade. That is a set number on how much of the kill need that packers have that they need to purchase on the cash market. That compromise bill combined a few different proposals and set regionally specific minimum thresholds. Now, I would say there's equal amounts of support and pushback for that, as the industry tries to balance the benefits of more market information with the cost of allowing more government intervention. Other legislative proposals on the table include proposals to create an investigative office at USDA to look at competition, specifically in the packing segment, of fed cattle contract library, a bill to suspend imports of Brazilian beef, and of course, a bill to reinstate mandatory country of origin labeling. A lot on the table there. We'll see if any of it actually becomes law. I know we've been talking about higher prices, and that creates a lot of optimism for next year, but the fact is we do still have a lot of challenges in this industry. Costs are going to be higher in 2022. That's almost a foregone conclusion, and we're still not through the drought. It's still going to have to be gauged how much liquidation we'll see in the cow herd from this drought. We've heard numbers of up to 30%. Hopefully not that bad, but that is going to have long-term implications for the industry. Cow and heifer harvest is at 10-year highs right now, so we'll likely see the national cow herd decrease at least until 2023. The positive aspect of this, at least for prices, is tighter supplies, extremely strong beef demand, and more competition at the packing segment should support prices over the next couple of years. Now, if we can just get the moisture to go along with higher prices, we should see some very improved profitability. Well, thanks for joining us for today's report, and thank you to all our sponsors. That's going to do it for us, and from all of us here at the Northern Ag Network, have a very Merry Christmas season. Take care.